The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, welcome back to the program. I've been gone for a week, and things are okay. Above ground, staying away from open graves. I want to start the show today with the New York Stock Exchange Index, and what I'm going to do is I'm going to go around the world and look at some of the different stock markets around the world, specifically what's happening in China and in Hong Kong, because there's something political that happened there that we should be aware of. Sarah happens to be there now, so she's given me a play-by-play description. But anyway, I wanted to start out today with the New York Stock Exchange Index. This is the chart that goes back just about 10 months. We've had some really good moves. The last major correction we had was way back in October when we had a pretty big sell-off, and then the market has gone up. We have matched the highs of where we were last July. That's pretty much where we're trading right now. As you know, the Dow has went above it, and the S&P has certainly went above it, and the NASDAQ has exploded above it. So this one is just testing that again. As you can see from this chart, we have a target here about another 5% higher or so in the New York Stock Exchange Index, and if the cycle timing is right, it should be in a couple of weeks around the 27th, 28th of April is what I'm looking for. Thanks to the work of Bill Ehrman of Ermanometry, we'll see whether it's going to be a big one or not, but we'll have a pretty good idea. I wanted to focus here on that March 11th low, because if you'll take a look at this chart, you'll see the natural trend line that started in early December. That was at a 61% retracement off of the October low. Then you came down and you made a 786 retracement in January. You made another 786 retracement in February, and you made another 61% retracement back on March 11th. The reason why this March 11th one is so important is because it's a combination of several cycles, not just the 60-day the cycle that's in there, but the long-term weeklies and monthlies that go back several years, actually all the way to 1982. There's been a cycle in there that has been pretty accurate, and it's coming in. It has nothing to do with astrology. All this is based on is the number sequences of the Fibonacci summation series. But the problem is that normal cycles, they'll go 28 days, 28 days, 28 days, and then they start to expand and contract. They expand when the market is going up, and they contract when the market is going down, because markets come down faster. So the upside of the cycle is very limited, and the downside is extended. We've seen this in crude oil and gold and all the commodity markets over the past couple of years. That's known as high translation, when the market crests on the early part of the cycle. In other words, if it's a 28-day cycle, it'll go up for 8 days usually, and then it'll be down for 20 days. That's usually how it works. And these cycles are expanding to the right side, and so that gives it a bullish bias, and that's what we've had ever since December, and it was certainly validated again on March the 11th. Now, the Dow Jones Industrials and the Dow Jones Industrial and the NASDAQ have broken the March 11th low. They've rallied back, but they did break that low, which was very interesting. But the New York Stock Exchange Index is overall much stronger right now than the 531 stocks of the Dow, the S&P, and the NASDAQ. And that's telling me that there's rotation going on in the market as people are looking around, to buy almost anything. So the importance of this low on March 11th is just it's just as important as the low we had on August the 15th of 2007. I remember that day very well, because I had just started to do a radio show the next week with Tom O'Brien on that day, August the 15th. The Dow was down, I believe, 300 points, and the Russell Index was actually up on the day. And the NASDAQ was not down by very much at all. It was basically all Dow stocks that were getting hammered and a few S&P stocks. But that was a major bottom. The market went up into October the 7th and then took out that low from August the 15th, and then it started down. It had rallies, of course, as it went through, but it was still in a major downtrend. So this one is more important, and I believe it's different this time because we have a situation where the whole world thinks that the Federal Reserve has got our back and it's, risk on, and whether that's going to be the case or not, we'll be able to see. I personally think there's going to be some problems with the counterparty risk that people have in the markets, but, that's neither here nor there. We'll have to wait and see if that turns out that way. Now, we'll talk about, bullishness in the market. I wanted to take a look at this chart of the VIX index, and as you can see, we're getting ready to almost approach the lows we made way back in last July at around 10. We're trading, below 12 now, and so I believe that, we'll probably complete that pattern here in the next couple of weeks, and then we'll see, if the VIX index is going to work. Remember, when the VIX index gets down there, you're going to be hearing stories about how worthless it is, and it doesn't really count anymore, and, this time it's different, but it's never really different. It's just that the news that they give you is a little bit better or a little bit worse than expected. Talking about news, 2 items that I wanted to mention is I think Apple has got to have the best PR relations department of any company in the whole world because they get so much free advertising on Bloomberg and CNBC. I mean, it's just totally amazing. I mean, to pay for those ads, I mean, of course, Apple can afford to pay for it, but they're getting all kinds of free exposure, disguised as informational things, which they are informational because I don't have an Apple phone, and I marvel at all the things that they can do with social media, but I'm a little bit distrustful with social media because of the bad experiences I've had on the internet of, stuff that's supposed to be true, and in fact, it isn't, and then the hacking problems that I've had with my website and my email, which has been a total source of frustration, but I'm working through that to get it done. The second thing is that looks like we're going to have another President Clinton coming to office in about 18 months. I noticed on the New Day or the State of the Union that they basically said that Hillary was pretty much unbeatable because she has a $2 billion war chest, and she also has the huge Democratic machine behind her. And then the third thing is that the Republicans will not come up with a substantial candidate to make sure that there's some equality in government. However, we had the same problem 8 years ago when we had a basically unknown senator, junior senator, not even completing a term, from Illinois, Barack Obama, and here he has been the president of the United States now for 6.5 years. So it's going to be very interesting to see the politics come out. But I'm thinking of moving to Hong Kong until this thing is all over, because I can't stand to listen to it every day. I mean, it's just a bombarding of the same BS over and over again. But that's politics. So what are you going to do? Thank God I didn't, choose that as a way to make a living, for God's sake. I thought trading was hard. Being a politician has got to be 3 times as hard. Okay, we've looked at the VIX index and we've looked at the New York Stock Exchange index. Take a look at the Bradley, because the Bradley model is not really helping us right now. We should be over a pretty significant top right where we are at the present time. The question is this is going to kick in and really work? But frankly, it looks to me like we've got another high coming up in the Dow, somewhere around 18,400, up another 3 or 4%, and then I would be willing to take a look at it. We do have a Bradley date. Came in on the 6th. Nothing really happened at that point, so I'm assuming that the market's still going to go up a little bit higher. I don't think this is going to be a runaway, but there's certainly a possibility of that. We haven't had a blow-off, and this has been the biggest bull market we've had in, I think, since 1929. on a percentage basis. I'm pretty sure of that. So we'll have to see what happens when it does. But folks, I've been doing this stuff for a long time, and it's not different. They're just giving you the same old tapioca. They're just putting either strawberries or apricots in it, because there's nothing really different, with the exception, I guess, of quantitative easing, and that's just a giant experiment that history says it's going to end badly, but maybe history is wrong this time. We'll have to give it some thought. I worry about the counterparty risk because of all these ETFs that were created to give us a chance to participate in all these different markets, but I wonder who's on the other sides of these trades, and are they fabricated, or how do they hedge themselves against these positions? I just don't quite understand it. But here again, I take the Fifth Amendment here, because I really don't know, and I don't want to say anything about it, but it just looks to me that something is just not quite right. And when you see some of these ETFs not acting the way they should, it really makes me suspect. I wanted to start off here with the Chinese market. We'll use the FXI, which is the ETF for the Chinese shares for Shanghai. And if you'll take a look at this, you'll see that we had an explosive move above 44. That was the 786 retracement. We actually gapped above that number, which told you that it was, incredibly bullish. And we've gone up and we've taken out the highs of 2011 without any trouble at all. This is a 30% move just in the month of March itself in the Chinese market. Now, the reason for that is the Chinese government has decided to, and they did this about a month ago or more, they decided to allow the people in China to buy Hong Kong shares. The shares are split up in A's and B's. They're all traded, but they're different classifications, but they allowed the Chinese folks to come in and buy it, and there's just been basically, an explosion of buying stocks in China and Hong Kong from the Chinese folks. And as you know, the prices that go up never come down. So when this ends, it will certainly end badly. It's amazing that they cut off some of the travel to Macau for gambling, and yet they open up the stock market for speculation. And believe me, the folks over there really like action, so they're getting action. The question is, this move is straight up. How high it's going to go from this level, I'm not quite sure, but we all know that this usually, will end badly, but we'll have to let history decide whether that's going to be the case or not. Sarah tells me that when they go for a dim sum in the morning, that all the chatter now is about stocks. They're talking about taking their life savings and putting it into, the stock market, which is a good thing when it goes up, but when it goes down, that's not usually a very good thing. We'll have to wait and see. On a program note, on Wednesday's show, I'm going to have Norman Winsky from Astro Trends will be back on. He has something special to talk to us about. We've got the stock market strong today, and gold is holding its own. We'll be right back after these few words.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to talk a little bit about the Dow theory promoted by Richard Russell. Richard is 90, and he's been doing this for, in fact, I think he's over 90 now, but he's been doing this for a long time. He's still in good health, still sharp as a tack. And basically the Dow theory says is to watch when you don't get confirmations of new highs in the transportations and the utilities, especially the transportation, because those are moving the goods, or the the utilities, which is the power used to put the goods into the market. And if you don't get that confirmation, then we have something important to look at. And if you look at this, not now, but in another week or two, if we get up into this area of late April, and remember that follows too with one of the strongest seasonals that we have in the stock market, where it is sell in May and go away and then come back in October. So whether that'll be the case or not, we'll have to wait and see. But watch this Dow theory here over these next few weeks. I'll certainly be watching it for us, but the transportations are quite a bit lower than the high. The utilities have made new lows on the year. The transportations have broken below the March 11th low, as have the utilities. So those are two things that also are big warning signs coming up. So we want to watch for this possible divergence between the transportations and the Dow. Folks, it's only been the last 4 or 5 years that they've thrown out the Dow theory. I mean, for many years, Richard Russell was, he was on Louis Rukeyser all the time before we had, CNBC and stuff like that. So he is a force of information. He's an incredibly bright fellow. He's got a lot of research behind him. And so we want to watch this Dow theory because it really does mean something. I know it's different this time because of the IBBs and all this tech stuff that's going on. And, I'm sure they're going to leave me in the covered wagons with the Indians circling me like they usually do with tech stuff. But I have not done any social media. I don't plan to do any social media. And I know that Google now is penalizing folks that have a website that don't use, the social media apps like Facebook and LinkedIn and some of the others. But, I don't know. Big Brother is he's got enough information on all of us, so I just have to wait and see, what happens. My little grandson, he's going to be 16 pretty soon. And he uses all the apps and stuff like that, and he's trying to coerce me into, doing that. But I really don't want to do it. My little phone is a $25 Walmart special that I pay $10 a month for, and that works well for me. I don't get any text messages. I don't even think it takes text messages. No, it doesn't. But that's good. Sarah's got the fancy phone, but mine's really, really, very, very small. Remember, I'm the one who thought that color TVs were a fad and also microwave ovens. So I was wrong on both of those. I was right about the computers, but wrong about the color TVs and microwaves. So just remember where that information is coming from. I just don't trust this social networking. And when you see what's happening in the news with the little cameras and all the stuff that the folks have on their phone things, and they're showing, for instance, I don't want to get into the politics of it, but when this gentleman was shot down in South Carolina by the policeman, I mean, they got everything right there on tape. I mean, this is good for purposes of legal things, but boy, they got to draw a line somewhere on some of this stuff. My goodness, it really is. It's really amazing, some of the stuff that comes on, and the other stuff that I want to mention this. I had this written down about Amazon. Amazon has a huge lawsuit going now against some of the vendors that are using Amazon because they're selling stuff, but it's all fake. They're selling Louis Vuitton bags, and they're selling Versace and other things, that perfumes and other stuff, and many of these things are fake, and Amazon doesn't have any way to track it down. And so what they're doing is they're putting a lawsuit against some of these folks to try to stop this. This is a big thing in China where they don't use they don't watch what your I can't remember what they call it. Oh, darn it. I know it off the tip of my mouth, but I'll have to remember what it is. But when you don't watch the trademarks, you've got to be careful of that, because this is a lot of source of, illegal money in China, because they sell, for instance, they'll sell things like Tiffany products. They'll sell Tiffany products that usually sell for $400. They'll sell them for $10. Well, the difference is that they're not silver, and that's the biggest difference. So we'll see. Oh, we got to pay a few bills here for our esteemed order. We got stock selling off a bit. Gold holding its own, still down on the day. And we'll be right back after these few words.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to put a chart up here that one of our den folks, Marshall, has spotted, and I wanted to give you an example of what we're looking at here. We have a really nice Gartly that is formed here in the S&P just now. It's the 135 pattern that was popularized by Roy Longstreet and his son Bill. We have the three lower tops coming in from February 23rd, March 23rd, and here we are around the 13th of April, where we've got a lower high. Still real early in the day, and we should get a sell-off here. Whether we're going up to make new highs or not, I believe that we are in the next week or two. But remember, the market has been in a 10-day run. We have not had a significant correction, or excuse me, an 8-day run since way back on April the 6th. And so it's been up, see, 1, 2, 3, 4, 5. So today's the 6th day that we've had a run. The last time we had a 6-day run, we came back and almost made a double. Well, we did make a double bottom off of the March 11th low. So that's the key thing that we're watching now. So today is the time where you usually get a correction, and that's what that this pattern is showing us now. This 135 pattern that we are in the process of getting ready to make a lower lower high. So that's what we're going to see if it holds up at that level. The good part here is the risk is not very much if you wanted to nibble at the short side in here for a short-term trade. We'll just keep an eye on that. Now, I wanted to get back to the around the world things that we're looking at here. I think what we'll do next is we'll look at the German DAX, because that has been a really big moving market. We'll look at the 4-hour chart here, because the daily has just basically been straight up. We've had about a 20% move in the DAX in the last just in the last few weeks, but we're up just about 20. We're up 25% in the month of March. So it's been a huge move. We've hit the 124 level several times, and it looks like we're heading towards 126, 127 in the DAX market. I know you're not trading some of these things, and frankly, I don't either. But it's good to know from what's happening around the world. That's what I think is important about this. I hope I'm correct, and I'm assuming that you would like to know this, but that's one of the things that we watch very, very closely, what's happening in the world. The next one we're going to take a look at, of course, is Japan. And as you can see, the Japanese stock market, which is the blue line, has been going straight up, and the ETF for the Japanese shares have been following it along, which they should, because it has should be a near perfect correlation. But we've had this really large move where we've gone up 29% also since January in the Japanese market. That's partially due because, well, I'm sure it's more than partially due to the ETF to the quantitative easing program that the Prime Minister of Japan started to go into, and we'll be able to see it. Now we're going to take a look at Australia. All I'm going to do is look at the major countries to show you the patterns that are there, because the patterns work on any of these time frames. But if we take a look, at the Australian shares, we had a huge ABCD form in December. I happened to be there when that was happening in Sydney and Melbourne, and it was such an easy trade. It was making new lows for the year, had made new lows since July of 2013, and now we've had a 10% rally off of that bottom, and it looks like we got another 10% to go in Australia higher, which is all leading to what we think is happening. At least what I think is happening is a high just a few weeks from where we are, at the present time. That's what I'd really want to look at. Now we're going to take a look at the emerging markets, because this is another one that's had a really strong move here over the past 4 or 5 trading days. We've had a situation where we've just been, basically vertical since the middle of March, and it looks like we're getting close to the 786 retracement, up about another $1.50. It's still in a long-term downtrend, but it's held some really significant levels here. And it appears that, we're having lower tops now, and we should not get any higher than 44 and change in the emerging markets, because that's still a very bearish one. If I did a weekly chart on this, you'll see that, we've hardly bounced off the bottom at all. So it's been a, pretty steep decline, and it doesn't look like it wants to, go much to the upside, would be my guess. So those were the main ones that I looked at that I wanted you to see, because I thought that was relative. I want to do one other, and I want to do the Nikkei Dow to show it to you on a little bit shorter time frame, so that you're able to look at it on the daily basis here. You'll see that we have a whole bunch of patterns coming up here at this 20,000 level. Now remember, the Nikkei trading at 20,000, folks. The old high in the Nikkei was the last week of December 1989, when we were at 39,700 and change, as I recall. And of course, they were all talking about 40,000 in the Nikkei Dow. And this was after our crash. We crashed into October the 20th, 1987, and yet we were still, way below our old highs when we were making, spectacular highs in the Japanese market. I remember that high because one of the reports from a reporter on CNBC was standing in front of the Imperial Palace in Tokyo, and he put $1,000 bill, a U.S. $1,000 bill, with the picture of Chase on it, and Salmon P. Chase of the Chase Manhattan Bank, and they put the $1,000 bill on the ground. He said that's how much real estate you could buy for $1,000 in Japan, and that was the week of the top of their real estate market and also their stock markets. And so that's you got to remember, when the news is out there, you got to be really suspect, because when everybody's looking over one side of the boat, looking at the dolphins, be careful, because the sharks are on the other side of the boat for when it capsizes. So keep that in mind. You don't want to be as dumb as a box of rocks, folks. Keep your wits about you, because when they're feeding you tripe and telling you it's filet mignon, you got to be very, very careful. And I believe that's what these folks are telling us when they say how much the Federal Reserve is helping us. But when push comes to shove, the Fed will take care of itself first and not worry about anything else. This much you can depend on, because the Federal Reserve is a bank of private banks. Even though they handle our money, they are a private bank working for themselves first and not the government. Anybody that doesn't believe that ought to read the book, the Creature from Jekyll Island. That's a really great book on the Federal Reserve. Also, Secrets of the Temple is another one to look at. So just be careful here. We've got some ways to go here, but when the market does start down, it's going to be very, very nasty. It'll be worse than 2007, 2008. I believe it's going to be far worse than that, because of all the things that have happened, these experimental things where they've tried to stretch out the economic cycles. And history will go back, because nature's not someone you want to fool very much. And nature has been fooled here for the last couple of years. We usually had a nice 48.5-month business cycle that had been going on for a couple hundred years. And the Fed has certainly stretched that out by saving the banks. And then the banks, not learning anything from it, have continued to do exactly what they were doing before, and even more so. So even though there's regulations, they're still getting around it. And you'll see, when Jamie Dimon gets a $20 million salary, which is, I guess he's worth $20 million, but, he gets $16 billion in fines for JP Morgan, and the guy still gets a bonus. Come on, folks, give me a break. I mean, that's not the way it's supposed to work, but that's the way it's working. So you got to be careful of, what's happening. Now, we want to take a look here at interest rates here. First of all, I want to show you the difference in the interest rates because of the problem that we have with the June contract for the Treasury bonds. Because if you'll notice here, you'll see that the big spike that we have, that's the middle chart, which is the 30-year bond. You'll see that big spike where it's gone up into new high grounds. That's really an aberration because of the contract specifications from the CME. If you're interested in learning about that, which I don't think you need to know, that's at www.cme.com/treasuries, and they'll give you an idea of why this has occurred. This will be corrected in September, because like the 10-year notes and like the 5-year notes, they're basically making a 61% pullback from the highs that we made, way back about 6 months ago. So that's primarily what's happening. The 30-year bond now is trading at, I believe, 2.5%. Mortgages for a 30-year bond are around 3.6, 3.7. So if you want to buy a house, folks, now's the time to do it, because I don't think you're going to get rates, much cheaper than where you have right now. The problem with the buying a house now is the requirements that these banks are asking for are, just the opposite of where we were in 2007, where if you had a heartbeat and were able to reach in your pocket and get change, they would give you a mortgage. But now you have to go through all kinds of things to really do. My daughter, who's a professional, bought a house just 2 years ago, and she put 70% down on the house and still had a hard time picking up a small $150,000 mortgage. So, I mean, that's just how things have changed here in the last few years, which that part is good, but it certainly shows down. Now, one of the charts that I wanted to bring to your attention regarding the real estate, and we're going to cover more about this on the commodity show on Thursday, where I'm going to have Rich Anderson as my guest. let me finish this, and I'll tell you more about what Rich is going to talk about. This is the lumber chart going back to 2009. You'll see we're very close to a 61% retracement. We're within about 3%, about 5% of the lumber contract, making a 61% retracement off of the low in 2009. So maybe this is the thing that's going to turn the real estate market around a little bit, because there's just not much. There's some being built, but there's just not a lot of activity going on. Why this is occurring, I don't know, because with the record low interest rates, you would think there'd be more activity, but part of this is covered by the fact that people are having a harder time getting interest rate loans, or mortgage loans, because of the restrictions that the banks are putting on it, because they're very, very scary. Here in Tucson, Arizona, where I live, there's some real estate for sale, but it's just not moving. I mean, it used to be every couple months a house could be sold, but now it's 6 months to a year to get that, get that moving. So we'll see if that continues on. In Phoenix, and Scottsdale, up where Mark Douglas lives, real estate is basically stopped. And Mark has a neighbor that works for Amazon. His house is relatively expensive. I think it's $650, and it's been for sale for well over a year. He's already moved his family back to Redmond, Washington, and the house is still for sale. So this was a house that sold for, I think, $1.2 million back in 2005, 2006. So it really there's a real big difference, in what happened then and what's happening now. Regarding the commodity show on Thursday, Rich Anderson of Anderson Capital Management will be my guest. Rich, besides being a rancher and a broker and everything else, he's a amateur weatherman, and he follows the weather patterns, especially the jet streams. And we were speaking just a week or so ago, and Rich told me that the jet stream has moved far north again, much like it did in 1983 and 1988, where we had tremendous droughts in the Midwest. And we've had a tremendous drought in California and the far west. I mean, we're almost ready to have water restrictions now here in Tucson. They already have them in Las Vegas, and they have them in Los Angeles. In Los Angeles, you almost have a permit to have your car washed. So there's really some serious things going on here. But Rich will go through with this and some of the things that he'll be watching. And not only that, but it's playing into the hands of what we'd like to see, is because we want to see lower prices coming in around the 1st to the 15th of May in the grain markets, because that's when the early parts of the drought start to show up as the jet stream stays north. But we'll cover that more on Thursday's show with Rich Anderson's, which will be a lot of fun. Okay. Now, I've gone around to the countries that I really wanted to cover, the emerging markets. We've looked at China, Japan. I didn't look at Russia. I looked at Australia, and I looked at Germany. I didn't look at Russia because it's a very hard market to trade. It's very illiquid and thin as the veil on a Muslim prince list. So you have to. I just not interested in the Russian stock market for a lot of different reasons, which I just talked about. So the rest of the markets are rallying along with this, because we got quantitative easing coming in across the world. We got several countries that are looking at negative interest rates, and that's it. I want to take a quick look here at the Treasury bond market, and then we're going to get to the gold and silver too, because I think that we still got a chance in gold and silver to raise up here. But if you'll notice here, that we've had a tremendous difference between the Treasury notes and Treasury bonds, and that's because of that aberration in the June contract. Got to take a few minutes here to pay a few bills. We'll be back with gold and silver in just a few minutes.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, I've put the chart of gold up to show you that we've got a potential here for a little higher move up to that 1230 level. But we've had a request from one of our folks that listens to us here at TFNN, and it's a really good example of a failure pattern along with of where the market is moving. That's the natural gas that we're looking at. We're going to put this chart up of natural gas, and you'll be able to take a look at it because it shows the 135 pattern that we had. It worked for like one day The market rallied from 272 up to 280, which is quite a bit. That would have covered your first unit of profit. But you notice when it broke the 135 pattern, back on March the 23rd, that it told you that the market certainly wanted to go a lot lower, and that's what we're looking at now. If we look at this on a little bit different time scale here, you're going to be able to see that we have a butterfly pattern that is forming very, very close to where we're trading. We needed to get down to about another 6 cents, and we're going to have a really nice buy pattern for a low risk trade, in the natural gas contract. It's trading at 2.49 right now. If we get down to 2.44, that would be a signal that you would have a very low risk at that point. And it follows the numbers very well. If you look at the 786 and the 618s on this, it follows the sequence of Fibonacci numbers, extremely well. So this is one that we'll watch on the commodity show on Thursday for sure, because this should be completed by then. We've got several more days to go, and we'll have a chance to take a look at it. So we'll see what happens from that point on. Now, the next one that I wanted to talk about, of course, is the silver market. And it has been a little bit more bullish than gold. We've still got a chance to hold up. It hasn't really done very much, except that we've held that 1615 level, which was the 61% retracement. And as long as we can stay above that, we've got a chance for the market to, to get a little bit higher. But I'm still bullish on gold and silver. It hasn't really done very much yet. It's held major lows. We've got higher bottoms, but we also have lower tops. So both of those are telling us that we have a chance to go either direction, which is not saying very much, but you got to watch, because if it gets below $16 in silver, we could easily go down and test that 1410, 1415 level in silver. That would be a test in gold down to about $1,130 an ounce. And anything below those numbers, folks, we're in really major bear markets in these, but I still think it's got a chance. Back in the old days, back in the 70s and 80s, if we had this type of economic stuff with quantitative and easing, gold and silver would be far, far higher than where they are right now. But these markets are being held down by other economic things, so you've got to, sort of, respect it. But that's neither here nor there. That means things could change down the road. We want to be prepared for it, because I believe everybody should own some silver and some gold, just to have it in reserve in case something really crazy happens, with the markets. Because we got silver trading at 1631, and the low last week was at 1613. So it just takes a few minutes of selling, and the market could break down and take us down below the 1550 level in silver. So we need to watch that right now. The key to this whole thing that I'm watching, of course, is this March 11th date in the stock market. That's such a key date, cycle-wise. It's just very, very big. We haven't had one like this that is so clear in a very, very long time. And not only that, but the NYSE has tested it. So that's it, folks. Live every day in an attitude of gratitude, and may God bless. Thank you for joining.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.